Welcome to the London Outlook for Tuesday, the 6th of February 2024. Starting off with the economic calendar, as we usually do, there are no high impact red folder news events for the day, and thus this won't influence any of our trading decisions for the day. Moving on to the daily, um, as you may recall from yesterday, we actually validated that the bearish structure has taken control, and now um, I'm simply using the daily to identify any significant targets for this downward move as we proceed to move to the downside. This being the first obvious target, and then the next obvious target being this lower right here. However, there's still some way for price to go before we actually reach this extreme. But I thought I'd just mark it up because it adds some context, so I know when to stop shorting for the day and allow price to retrace a little and reset. Since there's no high impact red folder news events, price might actually just trickle its way down slowly rather than push into these levels with a lot of momentum. Then moving on to the 4 hour, as I said yesterday, we had this bearish candle close, which validated to us that the bearish market trend has officially begun and is confirmed, and we're no longer in this uncertain scenario. So bringing us to today, what sort of scenario are we actually playing within? And I just want to unhide that, or hide that rather. So the scenario we are playing in is external range liquidity, momentum continuation, and the scenario essentially dictates that we will continue moving to the downside, and there is absolutely no reason to trade to the upside. In terms of the daily, just something to touch on here, we've got two bearish candles, so we're still a while away from actually validating that a reversal is highly probable. Having said all of that, essentially moving on to the 15-minute, what we can see here is we're still focusing on actually finding a way to get into the short move. However, it has to be repeatable and reliable and highly probable as a result. So having said all of that, what we know from yesterday is actually we printed the high of the day, the previous high of the day, that is first, and then we printed the low of the day, essentially aligning to our intended direction, and that's pretty much the bearish daily candle that we saw yesterday, which essentially means that we are in this pro trend leg, or rather ERL leg. Having said that, there is no reason to build any primary reversal legs based on what I said on the higher time frame, and thus the only valid POIs to trade from are all the POIs that exist within this leg right here. Having said all of that, there's a couple of POIs, however the POIs need to align with the fib levels, and the first POI that aligns with the fib level is this one right here. However, this POI is invalid because it isn't an extreme, it's not a flip, and it's not a chain. So hence we look further up, and if we look further up we can see that there is indeed a chain being built, while not on the 15-minute. This candle this OB you're seeing right here is on the 30-minute. Actually, let me take out some of these highlights so we can see more clearly. So these light OBs are on the 30-minute. So on the 30-minute we actually have a chain. But I guess on the 15 as well. And the reason why I'm saying that is right here we've got an interaction. This interaction creates an S&D flip, and the reason why I say supply demand flip is because you can see on the 15-minute we actually broke supply, created demand, making this a valid demand level. This demand level reacted, creating supply, and then broke the demand. So it's a supply demand flip and not just a reactionary flip. And then from there we've got a bit of an interaction right here. However, again, that interaction doesn't quite tap the S&D flip on the 15-minute. Rather, on the 30-minute we've got this chain building, so we could trade from the 30-minute or the 15-minute, either of them being valid. Like I said, we can just take a closer look to see if we're getting any mitigation. So as you can see, the 30-minute is mitigated, but the 15-minute isn't mitigated, so the next valid entry point would be here. However, I'd much rather get into the trade given the momentum situation that we are in. Just to quickly highlight what's happening on the 30 minutes, remember there's no reason to build a reversal leg to the upside. So anything to the left, whatever is to the left, that leg is valid. And what we see on the 15, 5 and 30 minutes is the same, it's just about precision. And on the 30 minutes it's much easier to see that we clearly are chaining, and this is the last 30-minute chain that aligns to the fib associated with the previous high and low of the day. So you can see this is the previous high of the day, that's the previous low of the day, and for me I'm happy to enter with this, given that the daily range is about 80 pips coming off the back of January. If we take a third of that, that's 26.6, rounding it up is 27, so we can get away with a 27 pip stop loss. However, given the momentum, I actually don't anticipate price to retrace that much, and for me it's more likely that in the current day we'll actually proceed to extend this leg. So what is my outlook for the London session? Essentially one of two. I'm waiting for price to retrace into this 30-minute chain, from which point I'll take an entry with my stop loss right here, or alternatively I'm waiting for an extension, a retracement, ideally the Asia high of the day being validated by Frankfurt or London. Once that occurs, I can anchor my fib to the current day, find an appropriate POI to trade from within alignment to the fib, stop loss above here, and this being the target, from the daily being a significant target. Once we achieve this target, I'm no longer as interested in shorting, because it's a significant area of liquidity and it's likely to provide fuel to the upside. So if none of these situations play out and price just plummets and takes this out, essentially I'm done trading for the day, because there's no additional reason, or there's no clear target for why price should continue to the downside for the remainder of the day, and I'll essentially reassess tomorrow. Again, there's no reason to trade to the upside as we in this downward momentum. So there's just something to consider. It's the point or the line in the sand where I'll stop trading. Other than that, have a good London outlook and we'll chat. Have a good London session and we'll chat again for the New York outlook.